Let's crack on with our webinar this afternoon. So good afternoon to all our attendees. It's great to have you all with us this afternoon, and a very warm welcome to this online briefing on IPSX Wholesale, which received a non-objection order by the FCA in December 2019. This is the second market that IPSX manages and operates, the first being IPSX Prime, which of course is a very different market to wholesale. Prime is now open for admission to trading of companies owning underlying single commercial property assets or multiple assets with commonality, and of course is all open for all investors. Prime also offers the opportunity for selling down a minimum of 25% of the company's shares on admission, and limits the debt loan to value in the entity of 40% and requires the issuing of a prospectus approved by the FCA. And you can find out much more about IPSX Prime up on our website, so please do go and take a look there. But of course, this afternoon, we're going to be having a session all about IPSX Wholesale. And in this session, we're going to look at how IPSX Wholesale works and what this means for both investors as well as for real estate owners. This is a new market, and we haven't really talked much about this. And we thought this was a good opportunity to bring a panel together to talk about what IPSX Wholesale means, what it provides, and how it will operate as a public market. We're also going to take a look at the advantages it offers to both offshore funds that are looking perhaps for a UK venue, and that obviously has been a topic of much discussion recently. We're also going to explore how wholesale offers real estate owners, particularly at this challenging time, some ideas and some considerations that perhaps they've not had before. So let's meet today's speakers who are going to guide us through the wholesale market. It's my great pleasure, first of all, to welcome Roger Clarke, who is our Managing Director and Head of Capital Markets at IPSX. And you'll hear from Roger in a moment. It's also my great pleasure to welcome Alfie Early, beg your pardon, who is an analyst and works in the market regulation and capital markets team at IPSX. And lastly, it's our great pleasure this afternoon to welcome Richard Werner, who is a corporate finance partner at BCLP, who specializes in advising listed property companies. So just a little bit of housekeeping before the team gets started. And I should first of all mention that you can ask any questions that you would like to the panel as we're going along. And you can do that by simply using the question box that you can see if you roll your mouse over the bottom bar in Zoom. And you'll find that it'll pop up with a Q&A icon. And in that, you're able to punch your questions in, and I can then pick those up as we're going along and gather those and then put that to the panel when we have finished the session a little bit later. We have put a mute on all attendees, and that's just because of the number of people that we've got with us today. It would have been a little bit of a challenging task to bring you all in on audio. So please do use that Q&A box, and we'll be very happy to take your questions, your thoughts a little bit later on after we've managed to go through this briefing. So let's get started with just that. So Roger, let's start with you if we may. So can you tell us a little bit about what wholesale really is all about, and perhaps just introduce it for us?
Yes, thank you, Kevin, and good afternoon, everybody. So Kevin's given a good introduction of Prime as a reminder for those of you that have followed IPSX over the last year and are familiar with Prime. So let me talk about the differences that IPSX Wholesale exhibit. I think the first and most important thing to point out is that Prime is available to all investors, including retail investors investing through their SIPs or their ISAs, which is really important at the moment. The ISA season that we've just been through has been the busiest ever, with 3 times as much money being put into the market as usual. However, wholesale is not designed for retail investors. It's for institutional and professional investors only. And because of that, it is open to a much broader spread of real estate assets than the stabilized income producing core and core plus assets that Prime is designed for. That means that in addition to any sort of stabilized asset, we can see development projects being financed, we can see value add refurbs. We could see much higher levels of leverage, whereas Prime is limited to 40% LTV. Wholesale has an upper limit of 80% LTV. A key difference is that there is no requirement for a prospectus. Our wholesale market is what is technically called a multilateral trading facility, and it's exchange regulated. So an admission document just needs to be submitted to IPSX. And a really critical difference is that there is no prescribed minimum free float. We'll talk more about this in detail, but it means that the free float can be, in some cases, a lot less than 25%. But still, the exchange is recognized by HMRC, the market is recognized, so companies listing on wholesale could opt to enter the REIT regime. Trading in the market is slightly different to on Prime in that investors would post the quotes that they're willing to trade at on the exchange, and then those will be matched by brokers acting on behalf of other investors. And I mentioned it's only for institutional investors. Because of this, there is a minimum trade size of £50,000 by value. Kevin, might we move on to the next slide, please? Great, thank you. So what does this mean for owners of the real estate? I think that clearly listing on an exchange brings choices, a new choice. It's a new option in itself, but importantly, it brings a lot of flexibility for the owner of real estate that's looking to either enter the REIT regime and or monetize their asset. I'll come back to that in a moment. It's also a way of attracting new investors, new sources of capital into real estate, because of course now that the asset is effectively being securitized, it is opened up to people who themselves don't or can't buy physical real estate. And importantly, it provides a transparent valuation methodology. There's nothing new about how the valuation works. As with any listed real estate, there is the need in the admission document to include a Red Book compliant valuation performed by one of our valuation members on the exchange. But of course, if this is happening at the asset level, it's going to provide a new level of information around the valuation, the bases of the valuation, some of the a SWOT analysis for the assets, a commentary on the tenant covenant quality. And of course, these are all things which are more important today than ever before, as we've seen in the listed space in the last few weeks. What started off as a rather indiscriminate sell-off of real estate is fairly quickly polarized into winners and losers, depending on how the market perceives the security and strength of the income streams. We're going to see through wholesale that investors have far more ability to make those sort of underwriting decisions at the individual asset level.
Great. Okay. Thank you very much, Roger. Let's move on, if we may, from that sort of introduction that Roger's very helpfully provided with us. And Alfie, let me turn to you. Can you tell us a little bit more about the admission criteria for IPSX Wholesale?
Yeah, sure. Got another slide to move on to? Fantastic. There we go. So just before I dive into the wholesale-specific eligibility criteria, I think it would be useful to do a recap of the broader eligibility criteria that all IPSX issuers have to fulfill. So every issuer that comes to IPSX must meet our definition of either a single asset issuer or a multiple asset issuer. Single asset issuer is very simple, one building, one asset, and that is the company's main asset. Multiple asset issuers, clues in the name, it can be more than one single asset, but there has to be commonality amongst the assets that the issuer holds. So this could be a single geographic asset that happens to have multiple buildings on it, like a business park, or it could be a common tenant. So if you take a chain of hotels, for example, you've seen one hotel, you've seen them all. So there's a variety of ways that issuers can meet this multiple asset test, but that is a key underlying factor that all wholesale issuers will still have to meet. In addition to this, wholesale issuers will still have to appoint an IPSX lead advisor for the admission of their securities to trading. Valuations will still have to be undertaken by an IPSX approved valuer. And the securities that are traded will still need to be freely negotiable, transferable, and eligible for settlement in Crest. So they're the criteria that are set out for both our prime and our wholesale markets. Turning more specifically to the criteria that we're looking at here on this slide, the wholesale-specific criteria. Roger's already mentioned some of them in the first slide. So unlike IPSX Prime, we can have issuers coming to market with a smaller free float, less than 25%. We can look at issuers with higher levels of gearing, up to 80%. And we can look at more interesting structures than on-prime, because prime is our regulated market for retail investors. They need to be stabilized income-producing assets. Whereas on wholesale, because it's our professional market, we can open this up to development, repurposing, and retrofitting schemes.
Okay, excellent. Thank you, Alfie, for setting that out for us. That's very helpful. I'm sure we're going to be coming back to quite a number of the points there that you were explaining to us. But let's go to Richard. Richard, you've been following the story of wholesale for quite some time now. What are your thoughts on the market?
Yeah, hi Kevin. So I think Roger and Alfie have covered some of the key points there. I think wholesale will be plenty of interest the reduced free float to only 25%, that's required on IPSX Prime. Will open itself to transactions.
Okay, Richard, I think we're going to have to just pause you there. I'm struggling a little bit to hear you. I'm not quite sure whether that's an audio link at your end that has just gone down, because when we were just testing this just before we got started at 2 o'clock, it was, it was working perfectly, and now we've lost you. So I'm just wondering whether we might just be able to come back to you again on that point and just try one more time.
Can you hear me now, Kevin? Can you hear me now again?
No, that's still pretty distorted, I'm afraid. That's really disappointing. Not quite sure why you've just suddenly dropped out. You've not moved or anything, have you? You're still physically where you were, and you're physically still connected. I just wonder whether it might just be easier, Richard, for you to either jump on and jump off again and see if that connection helps. Let's just try you one more time and just see if it might have cleared. No, afraid not. It's still pretty awful, and I would hate to inflict everybody else on trying to hear that, because it's pretty poor. So I think probably the idea, Richard, is you might have to just jump on and jump back on again. I am on my email, so and Rebecca is as well, who's supporting us on this webinar. So if you're experiencing a few problems jumping back on, just email us. But I think that's really a little bit awkward just trying to hear you.
Sure. I'll drop off.
Okay, that's great. Let's do that. Okay. Alfie and Roger, I'm going to come back to you again, just to keep us going whilst we're just waiting for while we're waiting for Richard, getting my R's muddled up now, while we wait for Richard to come back onto the webinar. Roger, you were talking a little earlier about your perceptions so far in around wholesale and the difference between prime and wholesale. Whilst we wait for Richard to come back and to hear his thoughts, could you share with us some perceptions that you're getting from the market as you've been talking to potential issuers and indeed to investors over the last few months or so, and then particularly maybe how things have moved around over this last couple of weeks?
Sure. Well, I think the biggest point to make that we find when we're talking to people in the market that they respond very well to on wholesale is this very broad spectrum of real estate solutions that can be provided by a marketplace that's as broad as this. But in particular, I think it's a point I mentioned earlier on. I said we would come back to. It's this free float being capable of being less than 25%. And what is actually the way that the market is going to work is that a free float can be as low as 10% without any further limitations or restrictions. And in certain circumstances, it can actually be even below 10%. I think later on we were planning to talk about some sort of theoretical examples of the kind of transactions we could see, and we'll come back to those, I presume, later on, Kevin. But one of the things that people have responded to very well is the fact that for very large assets, the free float can, in certain circumstances, be as little as 1%. Now, this means at its simplest that someone can list on IPSX Wholesale and part with or sell as little as 1% of the equity to a single counterparty. It's still treated as free float, and they can now enter the REIT regime, being listed onshore in London. And that's a completely new thing. And as we know, that is a topic that a lot of people are discussing at the moment. It's something that AREF is looking at as some sort of alternative to offshore fund structures. And I think the fact that we're providing that we're open and ready to go now, is something that practitioners we're speaking to are getting quite excited about and quite interested in.
Okay, thanks very much, Roger. I'm just going to see if I can try and rejoin Richard, who is trying to jump back onto the webinar again. Whilst I'm doing that, Alfie, can I ask you just to tell us a little bit more about some of the reflections that you're getting, particularly from some of the contacts that you've been having in the market around the proposition for wholesale. And let me just try and see if I can get Richard back.
Yeah, absolutely. I think one thing that keeps coming up in the conversations that I've been having is the ability for slightly different structures to be admitted on IPSX Wholesale. IPSX Prime, obviously, it has a higher level of restriction because it is our market for retail investors. But with IPSX Wholesale, it opens the door to a whole variety of new structures, some of which may not even have previously looked at public markets as an option. So for asset owners with some slightly convoluted legal structures, for example, IPSX Wholesale provides a new form of fundraising. So that is something that's really interesting to a lot of asset owners. One thing that is particularly relevant here is our fast track process. So for issuers that are already admitted to trading on other public markets, we have this fast track option. So if they've been admitted to trading on a qualifying market for more than 12 months, then they don't need to produce the admission document to come onto IPSX Wholesale.
Okay, so let's just pause a minute on that, and we can bring a slide up, Alfie, that I think talks a little bit about that process that you were just mentioning. Do you want to talk a little bit more against that slide? I've just brought it up for you.
Yeah, fantastic. That's really helpful. Thanks, Kevin. So what we're looking at here is the application process for normal, non-fast track applicants. So I'll just talk through that first, and then we can talk about how the fast track admission process is different. So the process will begin for regular applicants by submitting the initial application form. And this is really just to check that the asset and the issuer matches the eligibility criteria for IPSX Wholesale. It's relatively brief and just covers the key factors. So once we in market regulation have given approval for this initial application, the applicant would then move on to the next stage of the process. And at this point, they can appoint their advisors. So the lead advisor would be appointed to take care of the wider process, and the approved valuer would be appointed to undertake the valuation of the asset. The admission document would also be prepared, and this is where the application process differs to IPSX Prime. So instead of having to produce a prospectus that then goes to the FCA, the admission document comes to us in market regulation. Now, we don't expect to comment on admission documents in the same way that the FCA would a prospectus. We're happy to look at admission documents, but really our role is just to verify that the content is there and that it's correct and matches our eligibility criteria. So once that's all been prepared, the document is published and the IPO is undertaken. Now, as I was just saying about fast track applicants, if they're already admitted on one of our qualifying markets, then they don't need to produce the admission document. The idea behind this is that if they're already admitted to another market, another qualifying market, that the information is already in the public domain. So rather than spending time and money producing an admission document, all that eligible fast track applicants have to do in their pre-admission announcement is make it clear where this information, that's the core issuer information that's required by our rules in Schedule 2. The pre-admission announcement needs to make clear where this information is elsewhere publicly available. So if the admission document for a qualifying market is still available and contains all the necessary information, it can be very brief, and it can just say it can be found on our website here. Any information that's not already in the public domain needs to be reproduced in the pre-admission announcement. But that's the general principle, that for fast track applicants, the admission document doesn't need to be produced.
Okay. Great. Thanks very much, Alfie, for taking us through that. I think there's another slide here that you might want to just reflect on, which is just looking at this point that you were making about the ability to be able to fast track and to be able to speed. Do you just want to talk to that? And I have to say that we've got quite a number of questions that have been coming in whilst you've been speaking. So what I'm going to be doing is just taking some of those and bringing those through to Alfie and to Roger. We've also been struggling, I'm afraid, trying to get Richard back as a presenter, but we're going to try and see if we can get him in as a delegate. And then what I'm going to start to try and see if I can do is unmute him rather cleverly and bring him in that way. So we're going to keep going. So Alfie, anything further that you want to pick up on these particular points on this slide?
Yeah, sure. So as you said, there's quite a lot of information on this slide, so I'll draw everyone's attention to the key points. The main point of this slide is that the dates are largely indicative. So this more represents the timings that we think are likely to be how long it will take to put together an IPSX wholesale IPO. The shorter dates, the 48 hours and the 10 business days, are fixed in the IPSX rules, and that is the point at which these bits of information need to be submitted to us in market regulation. However, for the 4 to 6 weeks and the 8 weeks before admission to trading, these dates are more just how long we think the IPO would take to put together. But that's obviously not necessarily the case. The members in the audience that are working for the firms that will be putting together the IPOs, the lawyers, accountants, will know exactly how long they would expect to spend putting together the required documents.
Great. All right.
But they're not fixed.
Thank you, Alfie. Sorry to slightly cut you off there. Roger, I thought it might be useful to move us on to looking at some live examples. I say live in the loosest possible sense of the word, of course, some examples of possible issuers that might be looking at wholesale. And I wondered if you could just take us through some of these examples and some of these possibilities, just to help everybody understand a little bit more of the context of how wholesale works.
Yeah, thanks, Kevin. So I mentioned earlier on that a couple of times that wholesale will see a broad spectrum of different types of assets and structures. And here are just 3 pro forma examples. The first one, an office portfolio, 250 million market cap, but with a higher degree of leverage than would be acceptable on the prime market. It's possible to sell a minimum of £20 million worth of equity, which equates here to an 8% free float, in order to get admitted to trading. There can be one cornerstone investor, i.e. the 92% retained holding of the sponsor. A second example could be a partnership, a public sector partnership with the government to fund, for example, a hospital development. Here we envisage that there would be a 200 million market cap without leverage. It's just an example. The expectation here, based on a number of conversations we have started having with public sector bodies, both central and local government, is that public sector would always want to retain a controlling stake. Here we've assumed it would be 51%, but then looking to bring in private capital from a stock market, which is a new thing and something that has a lot of attractions for the public sector, being able to democratize the private sector partnership rather than it coming from large financial players, perhaps being able to allow people to invest in shares in assets that might be particularly close to their heart or relevant to them. The third example, a retail asset, it could be anything, but here this alludes to, as I mentioned earlier on, if the market cap is sufficiently big, 2 billion or above, that 20 million minimum value of free float that we mentioned earlier on can be as little as a 1% free float. Now, you might wonder why anyone would want to invest in a position in a listed company that's only a 1% free float. You might assume that people don't like the idea of holding shares in such a minority position. But we've actually found that there's a large pool of capital, particularly in the private bank and family office markets, those sort of pools of capital which perhaps don't ordinarily invest in listed real estate structures, who are very excited about the possibility of effectively coming into what amounts to being a listed club deal alongside very large owners of real estate who actually might not really be wanting to sell the asset itself. The main motivation of doing something like this would be to sell as small a free float as possible in order to enter the REIT regime. And I know some people on the call might be sort of thinking, well, I can do that on ties already. And yeah, you can. But again, there are large numbers of very influential owners of real estate that we're finding ourselves speaking to today who, for various reasons, are finding that they are less and less willing to put money into offshore structures or onto offshore exchanges. So what we're providing here is the ability to be in a London stock market, in the UK REIT regime, being onshore, but with a very minimal free float. But I think this page, I hope, illustrates that there are many different examples and many different issues that wholesale can provide solutions for.
Okay, thanks, Roger. We're still struggling, I'm afraid, to reconnect Richard, which is rather frustrating. I'm just trying to see if I can raise him on my mobile phone and try and see if I might be able to connect him in back into us that way. But Roger, thank you for taking us through those examples. I think we do have one more slide here that we could have a look at before we move on to questions. Let's see if we can do that. Roger, I think this might be something for you to perhaps conclude on.
Yeah, very briefly, I touched on some of these points already, but the fact that through our market structures that we may be able to bring assets to a stock market which previously would not have ever entered into the more traditional capital market, listed capital markets, because it can be done with single assets rather than portfolios. This is going to provide new real estate products onto a stock market venue, which is, as I say, we spend our time talking to investors across the spectrum, from fixed income investors, multi-asset investors, family offices, direct real estate investors. These are lots of types of capital, very large pools of capital that ordinarily would not invest in shares in a REIT. And the fact that we can provide this new product to them is really, really exciting for them. Part of what's exciting to them is that we bring transparent daily market pricing. A lot of the people on the listening to the webinar will be fully aware of the fact that there are huge pools of capital, for example, defined contribution pension schemes, which do not invest in real estate because there is no daily pricing. And I think as an industry and as an asset class, if we can actually attract these really large new pools of capital into assets which completely fit the sort of investment criteria they have, long-term asset and liability matching, asset-backed income streams, that's really good for all of us. It's really good for the sector if we can bring this new capital in. And it will come if we can provide daily pricing. And lastly, of course, just to state the obvious, this is all provided under the umbrella of FCA regulation. The protections that investors have, the comfort, the quality kite mark that provides to the whole structure and venue, it's all really good news for the asset class.
Very good. Okay, thank you very much for that summary, Roger, and for taking us through that. We're going to move now to questions and answers, and questions that we've had. We've had quite a number of questions as we've been going through this, which I'm delighted by. But let's start off, if I may, with some more general questions for both of you. And then we'll try and I'll try and see if I can dial Richard in. I've been desperately trying to do that whilst you've just been talking. But let me first of all ask you, Roger, a question, if I may, about governance. Could you tell us a little bit more about the governance structures, or the governance rather of the structures that will be on IPSX Wholesale?
Yeah, I think the first thing to emphasize there is that these are companies which will be issuing shares. The companies may own one single piece of real estate, but they are companies that everyone is familiar with. That means that they will have a board of directors, the majority of which need to be independent of the seller or possibly retained ownership of the asset in the first place. That board is responsible for the strategic decision making, for shareholder communications, the ongoing obligations, which obviously apply because it's a company listed in the UK. Many of the day-to-day asset management functions we would expect will be outsourced. So we expect these will be companies which are externally managed in the sense that the asset management will be outsourced, and indeed a lot of the administration and company secretarial functions will also be outsourced. So we would expect a board of independent non-executive directors. In terms specifically of the governance, I mean, we would expect standard governance procedures to be followed and applied. Again, it's the board that can choose, but these could be quoted company alliance guidance principles. They could be FRC, corporate governance codes. But on the whole, things that everyone would be familiar with. I mentioned the asset management. I mean, it's often, we find when we're talking to potential issuers, a big attraction of being able to sell their asset onto a stock market rather than to a traditional direct counterparty is that means that largely, if not completely, the investment can be crystallized whilst still having the possibility to retain the asset management contract and effectively start to construct long-term annuity income streams without needing to actually employ the capital on the balance sheet and own the asset yourself. This is really interesting for a lot of financial sponsors and private real estate fund managers. So that's a sense of how the board governance and asset management would look.
Great, thanks. Sorry, Roger, I was just on the phone to Richard whilst you were talking there, so forgive me while I'm just dancing around a little bit. Alfie, we were talking earlier about investors that can invest in wholesale. Could you tell us a little bit more about what that definition is of those investors that are able to invest through IPSX Wholesale?
Yeah, sure. So we've taken our definition of institutional investors from the FCA handbook. In the Conduct of Business sourcebook, there are two definitions which we've used: the professional client and eligible counterparties, and that's how we define institutional investors that can buy shares in IPSX wholesale issuers. This covers, for example, credit institutions, investment funds, that type of company.
Okay, thank you. Roger, we're going to go back to, if I may, a question around valuation. And this is a question that I know that is very much of the moment. There's been a lot of conversation, a lot of debate, a lot of discussion very recently about valuation in real estate. Could you tell us a little bit about what that process is here on valuation of assets coming onto wholesale? And Richard's joined us, so I'm now going to try and, as if by magic, find him and bring him in.
Shall I carry on while you do that? So I think I touched on this earlier on. I mean, we would expect an issuer to publish in the admission document an executive summary of a Red Book compliant valuation. This would include a basis of valuation, a SWOT, and a statement of covenant strength. Now, I think where that gets really interesting is that it means at the asset level there will be disclosures around the tenants, the leases, the ERVs, the risk perception of the tenants, the covenant strength, and forward-looking equivalent yields and reversionary yields. This is something that isn't normally at individual asset level. And importantly, I think this is what is allow investors to begin to underwrite future cash flows. And I think we see in the market today that investors are beginning to move towards earnings-based valuations to follow what we've had coming out of the US for many years, an FFO multiple-based valuation approach. And this is why I think the old presumption that real estate trades based on NAV, and more than that, the number of times I hear people tell me that listed real estate always trades at a discount to NAV, is just becoming an increasingly outdated notion, I think, because if you can value an income stream, you value the income stream. And just to make the point, Assura Group managed to raise £185 million last week in the stock market at a 44% premium to NAV. So I don't think it's true that real estate trades in NAV. The reason Assura was able to do that is because they develop and own primary care centres, doctors' surgeries. These have very long-term government-backed cash flows. They're predictable, they're indexed, they're long-term, and the market is prepared to pay for those a lot more than what the buildings are technically worth according to the Red Book valuation. I think this is something we're going to open up at the asset level for the first time.
Okay, sorry. Thank you, Roger. That's very helpful. I was just trying to pick Richard up, and I did have him for a minute, but I think he might have disappeared again. Richard, are you there? Are you able to hear me? No. So that's a little disappointing that that hasn't quite worked. Let's see if we've got a couple more questions. I'm just conscious of time. We're going to try and wrap this up in the next few minutes, if I may. We talked there about the asset valuation. We've talked there about the whole governance point. Do you have any other sort of thoughts here, Roger, for us that you might want to share, particularly around the types of engagement that we're getting at the moment from those that are thinking about wholesale?
Yeah, I mean, this as you mentioned earlier on, Kevin, this market got its final approvals from the FCA just at the turn of the year. So it's something we've started engaging with people in anger on just in the last few months, and it's attracted a momentum very quickly. I think it's done that for a few reasons, but most notably, just to reiterate, it's the low free float and the very interesting possibilities that offers to bring offshore structures onshore. If that is remotely interesting to someone from a reputational point of view, then it's very powerful because it's not been available before. It's something the industry is talking about widely. There are initiatives elsewhere to try and bring in new structures, but as we know, those of us that remember the introduction of the REIT regime, it takes years. Our market is open now, and so that's getting a lot of attention. But more than that, more than just that side of things, I think also the public sector discussions we're having are very interesting. They're very interesting because for various reasons, different parts of the public sector are interested in private capital markets partnerships. But as we have all seen in the last few years, particularly in London, where local boroughs, some more than others, have had some problems with momentum and some problems with sort of left-wing pressure groups. Rather than actually partnering with a large financial partner, to do so with a sort of slightly amorphous stock market investment is just a little bit more palatable. It's a little bit more interesting. It opens up a lot of very novel ideas around what you can do with Section 106 payments. For example, distributing shares to local residents for free could be something very interesting. And that's captured the imagination of quite a few public sector counterparties we've spoken to. So I think we're just offering people something very new and new options which haven't been there before, at a time when I think people more than ever are open to looking at things in a new way.
Okay, very good. Thank you. So let's have a quick look at some of the questions that have come in. We've had quite a number. So I'm going to do my best at trying to go through these, but of course we are limited on time this afternoon, so I don't want to go on for too long, but we have got some really interesting points that have been made. The first I'm going to come to, Alfie, you might just want to think about this. How do we ensure that the application information that we are being provided is correct and up to date?
Yeah, sure. So I assume that this question was asked in relation to fast track applicants. The key factor here is that the lead advisor that the issuer appoints will assume responsibility for the content of the application being correct. So in terms of non-fast track applicants, that's the content of the admission document. And for fast track applicants, it's the lead advisor's role to ensure that the information where it is published is correct and up to date. The other factor with this is that issuers are still subject to their ongoing obligations. So, for example, they'll have to maintain a website with certain key information maintained on it. I still have to publish 6 monthly and annual financial reports.
Okay.
So the standard stuff that you would expect to see.
Okay, let's have a look at another question that's come in, and this one is about, I think I'll try and interpret it. It's to do with the percentage of free float. Roger, might you just take this one? The question is phrased, are there any restrictions on what percentage can be listed in one issue? And I suspect what's really going on here is it's more of a thought around what does that minimum free float look like? At what point might the issuer be able to look at a reissue? So may I just ask you to come back on that one for me?
Sure. So, I mean, at the extreme, you could list 100% of the shares. So you can list anything from 100% to as little as 1%. I mentioned in the example, the worked example a few minutes ago, that the FCA's requirement is that the free float has to have a monetary value of at least £20 million. And it has to be at least 1% of the issued share capital. If you put those two things together, that means that if the market cap is 2 billion, the free float can be as little as 1%. If the market cap is 1 billion, the free float needs to be at least 2%, 500 million, 4%, and so on. Once we get to a 10% free float, then there are no further restrictions. So I think, Kevin, that answers the question.
Okay. Great, thanks, Roger. Let's see if we've got a couple more that we can squeeze in before we have to call time. First of all, we've got a question here about: is there a restriction on the number of admissions that we can receive on wholesale in a financial year? Roger, do you want to kick us off on that one? Alfie, I don't know if you've got any thoughts. You might want to come in after Roger's spoken, but let's see if we can deal with that one.
Sorry, Kevin, say that again. Is there a restriction?
Yeah, the question was, is there a restriction that we as an exchange have in the number of admissions that we can receive in a financial year?
No.
So it's completely open. There's as many as there's no restriction to it at all.
No, there's no restriction on the number of issues that could be admitted onto our exchange. If the question is coming, if the question is coming, is there a restriction on the number of assets that a single issuer could admit in separate listing? Well, again, no. As long as each of those individual applicants to be admitted to trading meets all of our eligibility requirements, there's no restriction on how many a single issuer might do.
Okay, very good. So as if by magic, I've managed to at last find Richard. It's been a very challenging time in the background. And Richard, I've unmuted you. Can you hear us?
I certainly can.
Fantastic. You're there. That's brilliant. I'm so sorry that we've had so many issues just with your connection this afternoon. It's just one of those things. We were doing so well. It was all going brilliantly. And then all of a sudden it all went wrong. But there we are. Listen, we've had a very interesting discussion around wholesale. And I know that you had a number of observations that you wanted to share from us, with us, particularly from a legal perspective. You've been following wholesale now for some time and watching the exchange develop. Would you like to just share with us some of your views and thoughts from a legal perspective on how you see that progress, and what do you think that now means for the real estate market?
Sure. Thanks, Kevin. Sorry about the technical problems. It's great to be with everybody now, even without the video. I haven't been able to see everything that Roger and Alfie have said, but before I got cut off, I think they raised some of the key points around free float and the LTV cap. I'm sure, because of conversations that we have had and are currently having with clients, that wholesale provides that wholesale will be of interest to certain clients. There are some transactions where the 25% free float requirement on prime is an issue, or certainly is an issue in the short term, even if it's not expected to be in the longer term, and therefore the ability to achieve a listing on wholesale with a lower level of free float is definitely of interest. And likewise, the higher LTV cap and the ability to accommodate development projects is also of interest. We have lots of conversations as well with clients who either already have or are interested in establishing joint venture REITs, and I think wholesale is going to be of great interest in terms of providing an alternative listing venue, a new listing venue for those sorts of transactions. In particular, I think where there is a desire to open up the joint venture REIT over time to third-party investment, and potentially as a precursor to a full IPSX prime listing. I think the option of being able to list those sorts of structures on IPSX Wholesale is definitely of interest.
Great. Thank you, Richard. And I think the other discussion point that Alfie was having earlier about this ability to, if you like, to fast track admission, that also strikes me from a legal perspective as being quite interesting. Have you got some comments that you'd like to share with us about that?
Yeah, absolutely. I think it's very important for people to appreciate the differences in the processes between getting listed on IPSX Prime and getting listed on IPSX Wholesale. The fact that on wholesale, it's not necessary to prepare a prospectus really does make a very big difference. Anybody who's ever been through the process of preparing a prospectus, which has to be reviewed by the FCA, will understand that it's quite a time-consuming process. It's a very formalised process with some fixed timescales which are quite long and which can't be flexed at all. They're quite rigid, and therefore the whole process can take quite some time. And the process of vetting and review by the FCA also adds quite a significant amount of cost. So the ability to achieve the listing in a process which is done in a more collaborative way between the issuer and its lawyers and the lead advisor, and to a lesser extent the exchange, will enable transactions to be done quite quickly and at less cost than where a full prospectus has to be prepared. And I think there's one other very interesting angle actually, which is the fast track admission route. I think Alfie may have mentioned that. It seems to me that is going to be a very quick and very efficient way to get onto the market. And I think one area where it could be of particular interest is for structures, for example, joint venture REITs, which are already listed on an exchange, which for whatever reason want to move to an onshore exchange. The ability to move to IPSX Wholesale very quickly and very efficiently through the fast track admission process, I think could well be of interest, particularly in the types of circumstances that I mentioned before, where perhaps the company wants to open up to third-party investment, or potentially as a stepping stone to a listing on IPSX Prime.
Yes, very good. Thank you. Some very good points there, and thank you for sharing your remarks there. We're going to be closing the webinar in a couple of minutes. So if anybody out there still would like to put a question to the panel now that Richard's rejoined us, then please do. We've got a few moments before we close. So if there are any questions or observations, comments that you would like to make, then please do put those forward. We've got a couple of other points here, guys, that have come in that I'm just going to share back with you, and we'll just take a look at these, if I may. There's a question here about how is the information provided publicly to investors on admission to wholesale. Alfie, Roger, would you like to perhaps comment against that?
Yeah, I'll take this one. So the information that's in the in Schedule 2, our core issuer information, is essentially what would make up the admission document, and that would need to be published. And that's available in the IPSX rules for wholesale issuers, just for reference. The information that's included in the initial application form won't be made public unless it would be made public elsewhere, if that makes sense. So anything confidential that is disclosed as part of the initial application won't be made public.
Okay, very good. Roger, let me come to you. There's a sort of a part B, if you like, to this point about information being made public. This one is to do with how does the ongoing reporting then work? Could you tell us a little bit about how that works, or Alfie, do come in if it's more appropriate for you to respond. So Roger, you're on mute there. There we go.
So ongoing reporting is, again, I mentioned earlier on, these are companies which are admitted to trading. So the Companies Act applies, the disclosure and transparency rules apply. So there will be interim and final financial statements disclosed, published and disclosed. The Red Book compliant valuation will be refreshed and disclosed and published every 6 months. The market abuse regime applies, so to the extent that there's material non-public information which needs to be disclosed, then it will be via RNS. But I think the key ongoing obligations that companies will be focused on will be periodic financial information being disclosed and the valuation being updated.
Thank you very much. Richard, is there anything further from your side that you think that you might need to add, or do you think Roger's covered everything there?
No. I think in terms of ongoing disclosure, I think Roger covered it. The key point is that like any other listed company, these companies will be subject to the disclosure and to the market abuse regulation, and therefore will have to publish price sensitive information on an ongoing basis. So it's similar to it's the same as the regime that applies to other publicly traded companies.
Excellent. Thank you, Richard. Well, look, we're coming up now to 3 o'clock. We're really now at coming to the end of our webinar this afternoon. So before I close off, I'm just going to go back to each of the panelists for their closing remarks, if I may. Just to invite them really just to help us conclude the session with any points that they feel that they would like to make before we all finally say goodbye. I should also just add to all the attendees that have been with us this afternoon that this has been recorded, and we will be providing a link to this as a follow-up mail to all of you that have registered. But let me first of all start with Alfie, if I may. Do you have any closing remarks or anything that you would like to finalize with before we all say our goodbyes?
Yeah, sure. I think the one thing that I would say, with wholesale being open to some slightly more interesting, different types of structure. If you've been listening to this thinking, I'm not sure whether this is for us, let's have a conversation about it. Us in market regulation, we're very happy to help talk through the rules, the application process, anything. So yeah, we're available.
Great.
More details on the website. Get in touch.
Thank you very much. Brilliant. Lovely. Let's go to Richard, if I may, and then Roger, I'm going to come to you finally, if I may, for the last word. So, Richard, your thoughts? Any concluding points that that you would like to share with us as we finish?
Well, I think it's a similar point to the one that Alfie touched on, which is that IPSX Wholesale can be used in a variety of ways. It can be pretty flexible, and certainly some of the transactions and structures that we've been speaking to clients about involve some quite creative uses of the market. So I think it does the market and the way it's been set up does potentially open it up for use in some quite creative ways, and to facilitate some quite novel types of transaction structure that perhaps wouldn't have been possible previously.
Great, thank you very much, Roger. The final words fall to you.
Thank you. Well, I think there's two points I'd like to leave everyone with. The first is that we've spent a lot of time talking to a huge spectrum of different types of investors. I touched on some of this earlier on, and I want to just emphasize that there is a very wide, very receptive, very deep pools of capital out there that really want to see and get the opportunity to invest in these single asset structures. And lastly, just to emphasize the point that we are open, ready to go, and picking up Alfie's points about the fast track process earlier on, not wanting to put in too much pressure on him, but if someone were to decide to use IPSX Wholesale today, they could be listed in 3 weeks' time. So no need to wait for new ideas to get processed through the Treasury and the FCA. We're ready to go now.
Great, Roger, thank you for that. And indeed, thank you to all our guest speakers today, to Alfie Early, and to Roger Clarke, of course, and to Richard Werner from BCLP. It's been great to have you all. And thank you to everybody that's patiently been with us and listened to the webinar. We do hope that you've enjoyed this. And of course, you can find plenty of other webinars at ipsx.com, and indeed also many of our podcasts are also there too for you to be able to download and enjoy. Through this difficult and challenging time, may we wish you all to keep safe and to keep well. And we'll be pushing out plenty more webinars over the next few forthcoming weeks. But until then, a very good afternoon. And thank you very much indeed again for joining us.